So you're thinking of buying a home. Today we're going to go over the top 3 things I think you should consider paying off or doing with your money before you decide to take that step into home ownership. Tip number 1 would be pay off any of these high ratio debts that you have. So if you have a line of credit, credit cards, if you have a school loan, that might be okay to keep because generally those are not looked at as bad by the lenders. But if you have the extra cash, pay that off as well. Tip number 2, have something that we would call an emergency fund. If you have the emergency fund there, we generally like to tell our clients 6 months would be a great amount to have saved up of your income and your salary from either yourself and your spouse. There's going to be unexpected expenses when you own a house. You might have repairs that come out of the blue. There's recently been a windstorm and I had to replace some shingles. I've had a window crack out of nowhere just with the fluctuation in the weather over the last couple months. So things can happen. You need to have money to do these repairs. Some of the repairs you can't wait until you have the cash to do them, especially if it's going to allow moisture into the house, allow the cold if it's the winter, of course, with the window. So you have to have this cash ready to go. And there's always a potential that your job situation can change. If you lose a job, if you have a kid and you're suddenly making less money than you were, having an emergency fund will allow you to at least pull some of this additional cash out so you can use it when times are tough or when you have one of these unexpected expenses that comes through. This might be your first, second time buying a house, maybe more, but having some additional money on the side if you want to do things like a vacation, if you want to do a lump sum mortgage payment, having a reserve fund or an emergency fund is very important. Before we give you tip number 3, if you appreciate this video or if you want some home buyer tips, comment down below and I can send you my free home buyer guide. And don't forget to subscribe to the channel and like the video. Share it with your friends and family if you think it's valuable to them or somebody who's looking to buy their first house or get into the market if they've been out of it for quite a while. And tip number 3 that we're going to talk about is your down payment. We all know you need a minimum of 5% to buy a house in Canada. That's only on the first $500,000. The difference after $500,000 up to $1 million, you need 10% for your down payment. So for example, $750,000 house, you actually need $50,000 as your down payment. However, interest rates have gone up in the last couple years, and what that means is I think it's really important to maybe consider upping your down payment, saving for a little bit longer so you have a larger down payment and you can decrease these monthly mortgage payments. We don't know where the rates are going to go in the future. They can go up, they can go down, they might be flat where they are, which would be fine as well, but you have to go into it hoping that there's not going to be a surprise. So have a little bit of an extra down payment saved up, use it if you have it, and that's going to make the process so much easier for you. If you think these 3 tips were important for you, once again, like and subscribe to the channel. If you have other tips that you want to share in the comment section down below, please, I'd love you to share them, and I'll see you in the next video. Thank you so much for watching. Have a great day.